I'm delighted to commence session 3, the Regulators Roundtable. I was fortunate to listen to the many deliberations in the last 2 days on how banks are responding to the challenges and disruptions within their countries at different stages of COVID recovery. Yesterday's discussions were particularly interesting, where the potential for tech interventions across all segments, retail, SME, and wholesale banking, was truly fascinating to listen to. Regulators play a significant role in making these transitions possible. In the last few years, regulators have had to move out of their comfort zones to embrace head-on areas like banking innovation, blockchain, digital currencies, fintech, and climate change, cyber risk. All this necessitates capacity building from both sides, the regulators and the banks. In the context of our conference theme today, I would like to explore the following during our discussions today. How do we build more resilient banks and economies? How do we advance the innovation agenda, making banking more convenient, accessible, and secure for all? How can we collaborate more effectively with banks to be perceived as a partner, guide, and not as an inhibitor? How do we advance the sustainability agenda, capacity building, climate change, and scenario planning? We are fortunate to have a diverse panel, 3 regulators from different parts of Asia, 2 bankers, and 2 senior advisors from the Financial Standards Institute and the Financial Standards Board. So let me start by introducing our first speaker, Dr. Tien Mu Hang. Dr. Tien has over 30 years experience in financial services supervision and has served in several leadership roles within the FSC, serving as the Director General of both the Insurance Bureau and the Securities and Futures Bureau. Dr. Tien Huang is presently functioning as the chairperson of the Financial Supervisory Commission of the Republic of China, Taiwan. Over to you, Dr. Huang.
Thank you, Mr. Rodrigo, and my fellow speakers and the distinguished panelists. It's my honor and very pleasure to take this part of the ABA conference. This topic is a very important one, especially for regulators. Last May, next page, when I assumed the role as the chairperson of the FSC, it's a single regulator in Taiwan. I said my policy goal is to build up a more resilient, innovative, sustainable, and inclusive financial system in Taiwan. The reason why I set this goal, as just Mr. Rodrigo just mentioned several issues. I see there are several trends which all regulators should keep in mind. The first one, of course, is low interest rate environment. The second one will be the demographic shift, the aging issues globally. And third one will be the climate change impact, no matter on the fund management of the bank institution or how bank can play a steward's role to convey the economy to a more low carbon economy. And of course, the other one is the fintech innovation and the income inequality, especially after the pandemic, coronavirus pandemic. So those are several issues I see is the major trends facing all the financial regulators. So I set a goal as the 4 major objectives for more resilient, innovative, sustainable, and inclusive financial system. And you can see from the slide the several trends can be noted by all the regulators. Next page. From the financial resilience perspective, of course, after the 2008, all the major international Financial Forum, FSB, G20, all focus on how to strengthen the solvency adequacy of the major bank institution. So we adopt Basel III, we adopt the GSIP or DSIP. Those are very important ones. But in Taiwan, of course, the several financial ratio is very adequate, including the solvency ratio, the NPL ratio. Of course, we have yearly stress testing. And so those the financially sound ratios in Taiwan, we think is relatively satisfactory. However, I don't think that the resilience is only focusing on financially. We should focus on operational resilience, cyber resilience. Those are also very important indicators to measure the financial resilience. Next page. I think the major issue facing all the regulator and banking institution is the climate change. In January 2020, the BIS issued a report entitled The Green Swan, which warns that climate change could lead to green swan events and cause systemic crisis, financial crisis. The report recommends that financial supervisors should use forward-looking scenario-based analysis to measure climate change risks and should coordinate with your own actions with a broad set of measures to be implemented by other players like governments, the private sector, civil society, and international community. So climate change poses a very potential threat to financial stability. So it's kind of a public utility nature. So all the financial institutions should keep in mind and form relatively necessary measures to cope with these climate change risks. So how to promote a green and sustainable finance has become major policy focus for Taiwan. Next page. To respond to these challenges, we have launched the Green Finance Action Plan 2.0 last year. There are several areas to promote sustainability. For example, extension of credit, nurturing professionals, information disclosure, and private-public cooperation. To sum up, I think there are several aspects I should focus. The first one is managing the risk. For financial institutions, physical risk, transitional risk from climate change is very important one for financial institutions. So number one issue is to ask our financial institutions to embrace the necessary risk management scheme to manage the climate change risk. The second one is how to use the role, play a role as a stewards to convey or to help the economy transform to a low carbon economy. So we can use the credit or investment to be incentive, to use engagement to the clients, to facilitate them to transform to the low carbon economy. That's a major important role for financial institution. The third one is disclosure. You can see the TCFD requirement. In Taiwan, we also ask our banking institution, insurance companies, our listed companies, and security companies to embrace the TCFD principles to disclose their necessary information starting from 2022. And the fourth one is how to cooperate or contribute to the international community. We share our experiences to coping with climate change. And the final one is try to build up a Taiwanese model to cope with climate change. Next page. Financial inclusion is also a very important one. I think the day before yesterday, ADB just announced a report. It's a key indicators for Asia Pacific region. There is a figures just shocked me, say that after the coronavirus pandemic, it's approximately 75 to 80 million Asian people be pushed into extreme poverty. This year in Switzerland, during the World Economic Forum, the Oxfam, the society also announced a figure that during the coronavirus pandemic, for those affluent people, takes only 9 months to recover from the epidemic. But for the poorest people, they need 10 years to recover from the previous stage. So it's a shocking fact for all of us. So financial institutions, they take money from the general public. They have the mandate, a DNA, to help those people in different social status. So financial inclusion is very important one, especially after the 2008 financial crisis. So you can see the several international financial institutions launched different kind of scheme to promote financial inclusion. Next page. In Taiwan, we set up financial inclusion indicators for Taiwan last year. And also we set different law and regulations to accommodate our financial institution, no matter it's banking institutions, insurance company, or security companies, to accommodate their services and products to cater to the different people in different social status. For example, last year, we issued all security trading. It means that young people, if they can buy many shares, they can buy just all shares. So it helped the young people to join the capital market. So it's a kind of financial inclusion measures. Next page. Fintech is also very important. The 2007, the smartphone come to the market, and it's a kind of revolution. Many poor people can use the smartphone to be access to the financial services. However, how to reconcile the value between financial institutions with high regulation and the fintech company with very open-minded, these two values should be reconciled. However, as a regulator, we should use the principle, same activity, same risk, same rule. So in Taiwan, we are the first country who used stipulated law to govern the Fintech Sandbox 3 years ago. And also we set up a one-stop communication platform to help those Fintech companies to understand what the financial regulations are, help them to accommodate to our regulation. And also we hope to promote the data sharing and also capacity building and in some Fintech space experimental part to help to facilitate Fintech development in Taiwan. Next page. The cybersecurity is also a very important one. We have the Fintech, we have the innovation. However, cybersecurity is also a side effect for the financial institution when they embrace the Fintech innovation. So we have various measures to remind our financial institutions to remind their measures on cybersecurity. We ask the financial institutions to strengthen their cybersecurity risk management and set a responsible person in charge of cybersecurity. Next page. And of course, so last year we also set up a cybersecurity action plan, focusing shaping corporate culture that emphasize information security, enhance management of information security or emerging technologies, promote cybersecurity training, education, etc. Of course, during the coronavirus pandemic, the BCM is very important one for our local financial institutions. Next page. In conclusion, may I remind that last year, I think last April, the former US State Secretary Henry Kissinger, he wrote a column saying that this coronavirus pandemic will forever alter the world. We are not only managing a crisis, we are building a future. So in this epidemic, we regulators are not just coping the crisis, management problems. We are using this context to build up a new paradigm, to build up a new future. Thank you very much.
Thank you, Dr. Huang. I think that was a very comprehensive presentation. You mentioned the importance of the regulator evolving to, outside the conventional paradigm of, financial stability to areas like managing operational and cyber resilience, managing climate change, and also the importance of the government, international community, banks, and the regulators getting together to implement the Green Finance Plan. Thank you very much for that excellent and succinct presentation. Now let's move on to the next speaker, Chuchi Fonesia. She joins us from the Philippines. She is no stranger to ABA. I recollect her telling contribution at the last physical conference we had in Philippines 2 years back. She is currently the chair of executives meeting of the East Pacific Central Banks and the supervisory authorities from 11 countries focusing on bank supervision matters. She is presently the deputy governor of the financial supervision sector of the Central Bank of Philippines. Over to you, Chuchi.
Thank you, Dilshan. So, on behalf of the Bangko Sentral ng Pilipinas, I would like to thank, of course, the Asian Bankers Association for this opportunity to share the BSP's efforts in adapting our regulations and supervisory processes, given the rapid changes in the banking industry. Now, for the next slide, for today, I would like to highlight 4 important aspects of the BSP's experience in this area. And first, let me share the swift actions taken by BSP to assist banks and clients deal with this unforeseen pandemic. And second, allow me to provide a snapshot as to how banks have weathered the pandemic. Third, I will highlight the key strategic reform areas of the BSP, specifically on risk governance, supervisory approaches, digital innovations, and sustainability principles. And this will be followed by a brief discussion on other BSP initiatives. I will conclude my presentation with some key takeaways. Moving on, even before the pandemic, the BSP has had a long history of structural reforms and prudent macroeconomic policies, which paved the way for the strong risk governance and financial condition of the banking sector. In particular, the implementation of effective corporate governance measures and risk management systems have prepared banks and the Philippine banking system to face these very challenging times. Risk-based regulations on key functional risk areas of banks were put in place. Related to this, the BSP adopted the Basel III capital and liquidity standards following a deliberate sequence and a proportionate approach. The BSP's risk-based policies were further reinforced by the institutionalization of a supervisory enforcement policy. Moreover, the robust surveillance system of the BSP enables us to identify emerging threats and vulnerabilities and deploy timely and appropriate measures whenever warranted. Off-site surveillance was improved through the establishment of a comprehensive Prudential reporting system backed by a reporting governance framework and the development of analytical tools. Over time, the scope of the BSP's regulatory framework was expanded to include other areas that are complementary to banking sector stability, such as the deepening of the domestic capital markets, broadening of financial access, and strengthening of financial consumer protection. The BSP has been closely working with the national government in supporting economic recovery. At the height of the pandemic, the BSP implemented a list of time-bound regulatory and operational relief measures. And these measures aim to mitigate the adverse impact of the pandemic by providing banks with flexibility to enable them to assist their clients get through and survive the economic crisis, thereby allowing the impact of the COVID-19 to remain manageable. In particular, the time-bound actions undertaken by the BSP intend to maintain domestic liquidity, encourage banks to grant financial relief to their customers, ensure continued access by households and enterprises to financial services, and promote lending, especially to important sectors of the economy, such as the micro, small, and medium enterprises, or the MSMEs. With these measures, the Philippine banking system has remained resilient and stable, with sufficient capital and liquidity buffers to withstand shocks. And this is evident in the sustained growth in bank assets, deposits, and capital, as well as ample liquidity position and loan loss reserves. For the first half of 2021, the Philippine banking system's total assets rose year on year by 6.4%, and this expansion was first largely from deposits, which grew by 7.6% year on year. Lending fell by 0.4% year on year, but banks have continued to grant new loans to critically important sectors of the economy, including the MSMEs. Meanwhile, loan quality has remained manageable and within the BSP's expectations. Gross non-performing loan ratio rose to 4.5%, but this was accompanied by high loan loss provisions. So the operationalization of the Financial Institution Strategic Transfer, or what we term as the FEAST Act, is seen to enable banks to offload their non-performing assets and free up capital for lending and other growth opportunities. Banks are also well capitalized and maintain sufficient buffer to meet liquidity and funding requirements in the short and medium term. With the Philippine banking system exhibiting strength, stability, and resilience during this critical time, it is not surprising for bank leaders to maintain a positive outlook of the banking industry in the coming years. So based on our banking sector outlook survey for the first semester of 2021, banks continue to view the Philippine banking system as stable, with prospects of double-digit growth in assets, loans, investments, deposits, and net income. Banks continue to expect a downgrade in the quality of their loans due to slowdown in economic activities. However, banks estimate that level of non-performing loans will remain manageable, and this will be accompanied by high loan loss provisions. And third, banks consider asset quality and credit risk as the topmost risk for the bank's operations, followed by macroeconomic and operational risks. And there is a distinct shift in banks' organizational focus towards sustainable financing. And finally, banks intend to maintain capital and liquidity buffers at levels even higher than the BSP's, as well as that of global standards to promote institutional stability. And due to the pandemic, the delivery of products and financial services has shifted to digital and electronic platforms at an accelerated pace. However, high reliance on technology could expose banks to more risks, such as anti-money laundering, operational and cybersecurity risks, as well as heightened consumer concerns. And moreover, the prolonged nature of the pandemic has encouraged banks to be cautious towards lending, which might prompt changes in their business models and shift to fee-based activities. And to ensure that the BSP's regulations and supervisory approaches are adequate and responsive to a rapidly evolving financial landscape, the BSP will continue to pursue actions in 4 key areas, namely strengthening risk governance, improvement in supervisory approaches, digital transformation, and instilling a culture of sustainability. In the area of risk governance, the BSP will continue to set higher standards in managing risk to ensure that the financial industry remains resilient against any threat to financial stability. The BSP's expectations in this regard include requiring banks to provide sufficient buffers and implement robust stress testing methodologies to timely identify emerging risks and take appropriate action. And second, banks need to implement more resilient systems to counteract cyber threats as the banking industry undergoes digitalization. In addition, banks must follow and adhere to the tenets of good governance and always protect interests of the public. The BSP has recently issued regulations that are all directed toward this end. And for instance, the BSP has established guidelines on reputational risk management, as well as required banks to observe and exercise extraordinary due diligence in the recruitment of their personnel. And these regulations reinforce the banking industry's commitment to adhere to the highest standards of integrity and foster confidence in the banking system. So the significant boost in digital transactions during this crisis has also increased cybersecurity risks. And in this light, the BSP is currently drafting an issuance that will require all supervised financial institutions to adopt a robust fraud management system. So the BSP is also developing a cybersecurity maturity model framework to further fortify the financial system from cybersecurity risks. On another note, I would like to take this opportunity to emphasize that while the delivery platforms for bank products and financial services may have changed and shifted, the banking industry is still exposed to the same risks as before. As such, the BSP implements and continues to push for reforms aimed at ensuring resilience of the banks and the banking system, promoting strong corporate governance and effective risk management system, and reinforcing the importance of sound risk culture in the organization. Amid an environment of higher credit risk, the BSP closely monitors developments, including risks that may pose serious repercussions in the banking system. In line with this, the BSP continues to assess banks relative to any changes in the risk appetite, lending strategies, and target market. And the BSP has also expanded surveillance toolkit to include forward-looking metrics on banks' asset quality. As we recognize and put more resources on information technology, systems, and digital infrastructure, we should not lose sight of and ignore fundamental banking principles and effective risk management systems. Moving on, the BSP has heightened and intensified our surveillance and data analytics to gain a sharper and more detailed view of developments in the economy and to promote the sustained resilience of the banking system. Right before the pandemic, the BSP implemented a single integrated risk-based supervisory assessment framework, or we call it for short as SAFER, or that's SAFR, that links the systemic importance and risk profile of supervised entities to the formulation of BSP supervisory plans for each institution. This pandemic has also highlighted the need for more frequent and shorter interval of monitoring to capture changes in external dynamics. Thus, apart from regular stress test exercises, the BSP performs ad hoc surveys and simulations. The BSP is also preparing to develop and implement climate change stress testing exercises for banks, recognizing the significant impact of climate change to bank operations. And meanwhile, to effectively oversee fintech, big tech activities in the financial sector, the BSP has adopted a mix of entity-based and activity-based supervision, and that this means that fintech companies which engage in a certain activity will be required to secure a BSP license on the same and comply with the Prudential requirements applicable to said license. So if a fintech company opts to perform activities in addition to what is allowed under the existing license, so this entity will also be required to comply with Prudential requirements applicable to the add-on activities. Now, with the digital technology, financial institutions can broaden their client base, tap other revenue sources, and improve their operational efficiency. Meanwhile, consumers will be able to access convenient financial transactions at lower costs. and it will make other financial products and services more accessible to consumers. So with this in mind, the BSP has implemented the 3-year digital payments transformation roadmap. And the roadmap aims to convert at least 50% of total retail payment transactions into digital, and to have at least 70% of adult Filipinos with transaction accounts by year 2023. And this is dependent on the implementation of key digital rails, namely the Philippine Identification System, or our national ID, the next generation payment system, and the open finance ecosystem. So the roadmap complements that of our national retail payment system, which has been instrumental in the development of innovative payment services, such as the PesoNet, InstaPay, eGovPay, and the QRPH that Filipinos are currently able to enjoy. So based on the end July 2021 data, the volume and value of transactions of both PesoNet and InstaPay have grown significantly, reaching triple-digit growth since the start of the pandemic. And meanwhile, with an open finance ecosystem that operates on permission-based data access, individual consumers and small businesses would be empowered to choose their financial service provider that could offer products and services best suited to their needs at minimum reasonable costs. So with this, digital financial inclusiveness would be promoted. And that the BSP also recognizes that future of financial services is really through digital technology. And in this regard, the BSP has started to implement solutions using artificial intelligence and machine learning for our regulatory and supervisory processes. And so also on the next slide, we recognize that the impact of calamities and natural disasters can translate to financial losses and pose significant threats to financial stability. So we issued Sustainable Finance Framework, which directs banks to adopt sustainability principles in their corporate and risk governance frameworks, as well as in their business strategies and operations. And even the BSP as an institution have also formally launched our Sustainable Central Banking Program. Now, moving on, since in the interest of time, I'll just give some snapshots of the next slide. So we believe that the core mandates and priorities of financial supervisors remain the same. So the supervisory tools, modes, methods, and scope have significantly changed with the evolving digital finance landscape. Hence, we acknowledge as supervisors, we must remain competent and qualified to address the changing and increasing demands of our supervisory mandate. And in closing, let me cite some key takeaways. So the BSP has put in place structural reforms and prudent macroeconomic policies, which has strengthened the ability of banks to face and survive the impact of this pandemic. And we likewise remain committed to further improving the banking sector defense framework against any form of risk to maintain financial stability. And moreover, BSP will continue to promote digital transformation to broaden financial inclusion. And we are also encouraging the mainstreaming of sustainable finance in banks' strategic agenda. We anticipate that these initiatives will contribute to a sustainable and inclusive recovery of the economy. And finally, to meet the changing and increasing demand of our supervisory mandate, we must continuously train, educate, and upgrade our skills to remain competent and prepared to address the changing and increasing demands of our supervisory mandate. So, but before I end, I'd like to congratulate, of course, the Asian Bankers Association for organizing this event. Once again, thank you and congratulations to ABA.
Thank you very much, Mrs. Funesia, for a well thought out, well organized presentation. You shared with us deep insights of the BSP's journey and some of the challenges post-pandemic and how you're addressing those. I can relate to a lot of the things you mentioned because in Sri Lanka also, The numbers that you mentioned in terms of the asset growth, liability growth, asset quality, all these we can relate to because we are also similar sort of demography, similar kind of countries in terms of the state of the journeys that we are in. Thank you so much for that. So we now move on to the third presentation. And before that, I just want to remind the audience that you can start posting your questions. We intend to complete the three speaker presentations and the panel discussion in about half an hour in total. And then thereafter, we will leave some room, 15 to 20 minutes for answering the questions from the audience. So let me quickly introduce our next speaker, Mr. Dharmasiri Kumaratunga, who joins you from Sri Lanka. He is also no stranger to ABA, having joined 2 previous physical meetings. He has almost 30 years experience in central banking and has worked in several positions, economic research, information technology, and really has been the driving force behind digital transformation. A lot of his measures have been put into practice by the banks. He is presently serving as the Director Payments and Settlements of the Central Bank of Sri Lanka. Over to you, Kumaratunga.
So thank you very much for ABA for inviting for the session. And so I think we have, heard a few sessions earlier. 2 sessions are very important sessions. Then in central bank side, so there are many activities that happened during the COVID situation, especially in 2020 and 2021. So there are many regulatory activities from the Central Bank of Sri Lanka has taken and steps has been taken. And the banking sector made the regulatory capital requirements and also the maintain the strong liquidity position and other prudential ratios at a satisfactory level during the 2020 and 2021. And bank also have been able to meet this capital Basel III requirement, as the Philippine Deputy Governor is also mentioned. Liquidity and the capital as in terms of the, both requirement as met. And also what you have seen in that the last year and 2021, and the credit is well diversified over the several sectors. We know that when the credit is provided for the customers or the different corporate, in some years we have seen that some credits are moving towards this the other sectors, like especially for the consumption. But in 2020 and 2021, what you have seen is that it has diversified all over the sectors, and also credit has increased significantly, 16.2% than the 2020, and NPL ratio is a decreasing level in 2020, but it is now in 21, it is increasing to the 5% level. If you see this debt moratorium and the deferment, we have taken action to give some leeway for the credit, those who get the credit facility, 18 months period. And also the central bank and the government has given the loan facility for investment purposes, 300 million in Sri Lanka rupees, that is close to the 1.5 million USD term, with a low interest rate, 1.5% is in the average weighted prime lending rate. In addition to that, some of these suspension of recovery actions against non-performing borrowers, especially for the semi-sectors and other borrowers also affected from the last year and this year. And new working capital facilities also provided by the central bank with the very low rate compared to normal existing rates which we are having for the 4%. Normally, we know that in our country, it is the interest rate is normally it is more than 10%, 11, 12% in some cases, but it has given the 4% very low interest rate compared to the normal interest rate prevailing in the country. And we also informed to all the sectors, and especially for the banking and non-banking sectors, restructuring for the non-performing credit facility. In addition to that, some of the penal interest rate, we waive off this accrued and unpaid penal interest rate. And those are the major, I think, actions which you have taken. And when you are giving some loans, or the banking sector is giving some loans to the customers, they are also looking this crib record. That is where the customer's unpaid loan is recorded in the crib. Then that is a different institution. Then that is also we are informed to not to consider on those type of looking for this crib type of reports. And looking for this payment system side, payments value chains we are witnessing of the high level front end innovation. So always we are looking for this value chain of this payment system, linking with the fintech and also the other sectors, all the other sectors, non-bank sectors, and the banking sector, and also the CBSL, Central Bank of Sri Lanka. So many financial institutions, including the regulators, are increasing focusing on the fostering of innovation. As what you have seen in the after lockdown period, it is very much difficult for us to make a transaction, and we cannot make or the reach to the supermarket and other entities. Then different innovations are happen in last few months time. So in addition to that, the real-time payment is accelerated. I have seen that Philippines is more than 500%. In our case also, in last year, March to April time, we have seen some of the real-time payment has increased more than 500%. And banking and non-bank sectors are also focusing on the blockchain environment. And we also promoting this AI technology. And in addition to that, global e-commerce payments has increased in globally. In 2020, it has surged in 25%, but in 2021, it is increasing to the 16%. And in Sri Lanka, in the first 2 quarters, in June, it has increased to 89% growth. The CBSL also welcomed the adoption of the new technologies while ensuring the safety and soundness of the banking system, and emerging partnership between the banks and the fintechs of the country is we always looking as a payment system is on to the Central Bank of Sri Lanka and regulating. Then always we, I think, encouraging to link having this fintech and the banking community. And so we also taken some new action on the less cash, moving towards the less cash society. In Central Bank side and also the country-wise, the different, I think, payment systems we have introduced in the past. The 1993 interbank payment system, that is a bulk payment, the salary payments of the government entities are making using this slip transaction. And checks imaging we introduced 2006, and common electronic ATM machines. Any person can take the money from the other ATM. Then we introduced 2013, and SEFT, common electronic fund transfer switch. That's a face-to-face transaction or the person-to-person transaction. Up to 5 million rupees we can make using this SEFT transaction. And direct debit facilities also we have introduced in 6 years back. And Just Pay is in the right-hand side. It is the mobile payment instrument that any person can link the 5 or 6 banks to his mobile phone and make the payments. That is we call the Just Pay. And so this is very popular with the people. And also LPOP mean that that is also Lanka Payment Online Platform. We introduced for this one for the government payment, especially Sri Lanka Custom, Port Authority, and other entities are linked with this. In addition to that, Lanka QR is also a one entity and one scenario we have launched in 2018. So those are the major activities we have done. And common electronic fund transfer, that's a 24/7, and it volume has increased 108% in 2020. And Just Pay, that is a mobile apps, then it has also increased more than 85%. Lanka QR is increased more than 100% growth in 2020, and up to now it is also increasing trend, and more customers and more merchants are willing to join with this Lanka QR. So that is a central bank, we introduced that one. At present, almost all the banks are joined with this scenario. This is a Lanka payment online payment platform. This is mainly for the custom payment and the Sri Lanka Port Authority. All major government entities are linked with this system. So very low rate, we are charging $0.25%. Dollar is taking up to 100 million USD also can be transferred very quickly and instantly. These transactions are taking place. In addition to that, Central Bank also given the license for the two major players, telcos players, to have this e-money system, mobile phone e-money system. So this was we introduced in 2012, and any person having this feature phones also can make the utility payment, merchant payments, institutional payment, and internet payments so on. So this is also very much popular in remote area in Sri Lanka. In addition to that, we also introduced the Regulatory Sandbox in 2020, as the Philippine Central Bank and other central bank also saying. So this is also new innovation, and we promote all the players and the fintech players to come and test their product. I think this will, more popular with the fintech companies, and what we have informed to the fintech companies is that join with the banks and send their proposal to the central bank. Then, so we be able to look in the case by case. And so in addition to that, we also introduced the national card scheme, and this is also very much popular. Why we introduced this one is that compared to the other international card scheme, we've seen that most of this foreign exchange is outflow for the country, and also some of the MDR is quite higher than what we have expected. Then so one aspect of this NCS national card scheme, this is a local card linked with this JCB. We planning to issue this card for the transport sections also. This will be issued as a hybrid card and can be used for the transport sector. Most probably next month we will be able to launch the system for the transport sector. We introduced this minimum compliance guideline for the mobile phones, as we have seen that all these players, especially for the banks and the non-bank sector, they develop many applications, mobile phone applications. So therefore, we have this some kind of guideline, because we always stick into safeguard our customers. So therefore, many activities we have introduced with this guideline, especially for the server-side infrastructure, policy formulation and documentation, and tampering detection, cryptography, and there are many aspects we have take a look on this guideline. And the bank want to come for the mobile phone or mobile phone payment apps, then of course they have to adhere to the guidelines, and third-party auditors has to be audit for this guideline. There are 26 guidelines we have issued. Under that, more than 150 pages are there to fulfill by the auditor, going through the auditors. And once the auditors report are submitted, and the board, it says from the bank or the financial institution, has to take a decision and send to the central bank to evaluate. So this is the process, normal process. And for this especially, we are looking for the customer protection. So that is why we issued this mobile payment system guideline. And RTGS is a real-time cross settlement system. And now recently what we are looking is at a new innovation for that one. And last year we reduced a significant price reduction for the RTGS and common electronic fund transfer. That is, I think the per transaction, earlier it was 50 rupees, and it has come down to 30 rupees, is 0.15 cents for the USD term. And some of the transaction, mobile phone transactions, payment transaction also increased. Early it was 25,000 rupees we can make a payment, but now it has increased to the 50,000 rupees. In addition to that, the Lanka QR side, earlier it was in 1% charge for the MDR, and during the COVID period in 2020 and the 2021, we have reduced to 0.5%. And also we have facilitate for the customers to online onboarding facility during the COVID situation. And normally our KYC regulation is that they have to come to or visit to the bank and do the physical verification of the KYC. But during the COVID time period, and especially in the last year, so we have given the facility for the all the bank and non-bank financial sectors to open up for the customers. Then customers can do their online registration with the banks. And in future, the virtual currency, to study the virtual currency, there are many activities are going on in the Sri Lanka and all the other countries. To study the virtual currency, it is legal or illegal, or are we giving the facility for the virtual currency? Then we appoint the committee, and the committee is working on that one. And we also, in our RTG system, at present it is 17 years old. So therefore, we try to upgrade that one, while that multi-currency RTG system is also going to implement. In addition to that, blockchain-based shared KYC, we tested this one, and POC is completed now. And POC results are with us. Then, of course, we want to get the approval from the relevant authority and want to implement this shared KYC blockchain using blockchain technology recently. And national remittance app also in the way. And we are planning to, open up this for the other players to come for the national payment remittance app. In addition to that, Central Bank of Sri Lanka is also working on the open banking and digital banking, AI-based solution, digital payment platform. There's a new scenario, seamless payment from the current account to savings account to the mobile phone, and the mobile phones to the other way around. So that is what we are thinking on the digital payment platform. And we also think, this central bank digital currency. So we know that the RegTech and SupTech, I think Philippine the Deputy Governor is also mentioned, we also identify these in, but we are in the initial step to accommodate these things. So what are the key challenges we are facing is that the number one is the public awareness and the building of trust of the public. And this is a major barrier we have seen. And so this is what all the banks and the central bank is working on that one. And also bringing the new products to the remote area and popularize digital payment is a major theme in this year and the last year. And relaxation of the regulation, especially for the KYC, is also underway. And so we are thinking and rethinking on how can we implement this in. And cybersecurity is also a threat. And so we are also looking to strengthen our security platforms and everything, because all these transactions are going on the e-commerce and the other online transaction. We are looking on that one. So thank you very much again to invite. And so over to you, Dilshan. Thank you.
Thank you, Kumaratunga. That was a very interesting, thought-provoking presentation. Many initiatives in the pipeline and also many initiatives that are already in process. If we can implement those effectively, there would be revolutionary changes in the way in which people will transact and do business. I think what I hear from the three regulators from Taiwan, from Philippines, and from Sri Lanka are very similar themes. So I think there's a lot of opportunity for regulators to collaborate with each other. And I'm sure ABA will provide that forum as we go along, even in the future, to so that we learn from each other, share best practices, and then move forward really effectively implementing. So now we move on to the first panelist. The first panelist is Timothy Sawyer, who is the CEO of the Bank of Maldives. So I think he's the only other banker outside myself on this panel. We have the regulators as well as the gentleman from the Financial Standards Institute and the Financial Standards Board. So I just want to ask Timothy, we've heard the three central bankers present their approaches to ensure financial stability in the midst of a global pandemic. I mean, very, very varied new things that are being embraced by the regulators now. To what extent is your own regulator in the Maldives consistent with the approaches mentioned? And how has this impacted your own embracing of digital and also managing climate change, which is so important for a small island nation like Maldives?
Thank you very much, and an honour to be associated with you, Dilshan, and one of two bankers on the platform. Very quickly, to answer how we've handled it compared to what the regulators have put out. I suppose I should point out that the Maldives is a very small island compared to Sri Lanka or Thailand or indeed the Philippines, and population here is only about 500,000, including immigrant workforce. So there is always a difficulty for us, and particularly for the regulator here, the MMA, Maldives Monetary Association, to be able to keep up to speed with perhaps more well-endowed regulators, such as the free speakers we've heard earlier. So to a certain extent, there's always a case of catch up in our place and making sure that we're dealing with the essentials rather than anything else. Second point I'd make is that obviously we as an economy are almost entirely dominated by tourism, and therefore, as you might imagine, COVID has been our major focus over the last year or so. And I'm pleased to say we're still here and still surviving through a series of measures such as moratoria and careful liquidity. So the Bank of Maldives, for example, still is at 36% tier 1 ratio. So we're well placed thanks to our actions and thanks to the actions of the government to continue. Turning to the key issues, one of the key things the Bank of Maldives and indeed the regulator have been doing over previous years and well before I joined was to tackle the issue of diversity and inclusion. And that particularly has been through a digital stance. Well over 90% of all transactions done by the Bank of Maldives, for example, we're probably 50% of the banking sector, is now digital. I think everyone who has a bank account has one in the Maldives. It's relatively simple to open. And once you have it, you can transfer money easily online through a mobile pay app. And if you go around the Maldives, you'll see people on their phone the whole time moving money about through their mobile apps. So digital security here is key to us, and we have got a good digital presence, but at the same time ensuring that there is diversity and inclusion. So I think we've ticked one of the boxes that the regulators have focused upon. The key job going forward, I think, is to look at open banking, which has obviously worked well in various countries bigger than ourselves. And currently the regulator and ourselves are looking at what's best to do in terms of open banking, what facilities to offer, what companies can come in as payment providers. So I think that will be being launched mid next year, and will sort of add on to the digital framework already there. The issue perhaps that we haven't been so good on is the climate change, low carbon environment, which you might find surprising given the highest point in the Maldives above sea level. That is natural, I think, is the second hole of the golf course in Balingli, which is no less than 4 meters above sea level. So obviously global warming is a big issue for the Maldives. And this is something we're now turning our attention to with the help of the likes of Asian Development Bank, etc., to see what we should be doing, because we've done some initiatives with a very small level, such as introducing a bike hire scheme so people aren't on their mopeds the whole time, to introduce a low-cost lending scheme for electric motorbikes, as mopeds here are ubiquitous. But that's really just playing at the edges. So I think one of the key initiatives for us for this year, or probably mainly next year, is how do we react to the climate change challenge? How do we position ourselves in the light of what some of your speakers have been talked about? And I'm afraid to say that's probably a work in progress, and is an area we need to work harder upon. So we've done well in sort of protecting ourselves about COVID, providing a digital framework, being secure, making sure there is a diverse banking population. And now it's time for us to, I think, turn our attention to this low carbon discussion and climate change. So I hope that's answered some of the points raised.
Thanks, Tim. Can I just ask you a quick follow-up question? Particularly following the pandemic, in terms of the challenges you had to face, particularly given the, issues with regard to asset quality, customers finding it difficult to be able to service their debt, businesses struggling to, continue their operations and so on. What help and what kind of assistance did you get from the regulator, and how satisfied are you?
It's an interesting one, because here in the Maldives, as I joke, everyone knows everyone. So if someone's defaulting on their debts, they probably have at least one member of staff, their extended family works in the bank, and they feel embarrassed. The regulator was proactive at the start in talking and saying we need to do a moratorium, we need to help. it's been largely down to individual banks how we implemented that. So we offered a 6-month payment and repayment and interest holiday, and followed it up within a further 3 months for those who needed it. Whereas the regulator was making sure more that all banks were doing something and there was some degree of consensus. So it was a light touch, I think, by the regulator, but I think they understood we were reacting, and then we followed up with further initiatives. For example, people were struggling with their credit card. We moved on to personal loans with a repayment grace period and lower interest rates. So I think the regulator was very focused on our liquidity, because obviously we need dollars and we're pegged to the dollar, our currency, and ensuring there was liquidity in the market. They were very good at sort of making sure that, you know, actions were taken. And then when they saw that we were reacting well, I think they sat back, not opposed because they were indifferent, because they felt the right measures were being taken. So I'm sure they would have been firmer if we hadn't reacted, but I think we went the direction that was the right way, and therefore they were more, shall we say, standoffish in the nicest possible sense.
Thank you. Thanks for that, Tim. I mean, I think I can relate to what you said, because in Sri Lanka also we've had now almost the third, lockdown, and following that also moratoriums being granted to businesses. But as we see every stage, every step, we are beginning to see more businesses recovering. And, at each stage, from a situation where we had something like 20% of our businesses on debt moratoriums, now we are down to less than 10%. So 90% of our customers are effectively being able to service debt, which is very encouraging. And it's also because of the support, I think, that has been extended by the banks, and also the support by the regulators being very close to the customers in terms of really understanding who is genuine and then supporting them to really, get back on track. So I will move on next to Jeremy. Jeremy is joining us from Switzerland. He's from the Financial Standards Institute. So my question to you, Jeremy, is from a global perspective, which of the regulatory issues identified by the speakers do you expect would have greater implication for banks?
Yeah, thank you very much, Dilshan, and I hope you can hear me well. And thank you, by the way, also to the ABA for inviting me today. If I may highlight, the common themes or issues that I picked up from the 3 presentations, which, by the way, were all great, and they're all very interesting and informative. So thank you very much to the 3 speakers. So anyway, I think the common themes are, innovations in the financial system, where in that context, I heard specifically mentioned, the use of AI and cybersecurity risks. The second theme I picked up was on climate risk. The third is on financial inclusion. And then the fourth, of course, is the continuing impact of the COVID-19 pandemic, right? Now, these issues are common globally, but I would say that, of these issues, those that would have greater implications or impact for banks going forward are climate risk and the use of AI. Now, for the other issues such as cybersecurity risk and financial inclusion, I'm not underestimating their implications for banks, but banks have been dealing with them for several years now. And in the case of the pandemic, it has been going on for more than 1.5 years. And so although both supervisors and banks are still continuously assessing, the pandemic's impact, in general, I think we have a better grasp of the situation now than compared to a year ago, for example. Now, the same couldn't be said, however, when it comes to, climate risk and the use of AI, right? Supervisory views or approaches haven't really crystallized in these areas. And so the impact on banks is also, should I say, indeterminate at the moment, right? Now, when it comes to climate risk, supervisory authorities are increasingly taking action to require, financial institutions to be prepared for its potential impact. And I think we've heard some of the speakers mention about their own initiatives. Banks in some jurisdictions are now required to do, self-assessments of these potential impact on their portfolios. Some authorities are also conducting, pilot stress tests and so on and so forth. But I think the tricky part and the challenging part when it comes to climate risk is that, assessing it they have their own challenges, right? climate-related risks have a much longer time horizon, for example, than the traditional financial risks that supervisors and banks are used to. And in addition to that, the data covering future climate patterns may be unavailable as well, or unreliable given the changes in the climate patterns that we are witnessing already. But I think one thing is certain, and that is climate risk will definitely have an impact on how banks do their business and how they would be supervised in the future as well. Supervisory authorities are already preparing for this. In fact, the BIS, together with other international organizations like the International Association of Insurance Supervisors, the Network for Greening the Financial System, and the Sustainable Insurance Forum, they recently launched the Central Banks and Supervisors Climate Training Alliance, or a CTA. And the idea really is for the CTA to develop training materials based on guidelines and standards that were developed by members and also by the Basel Committee on Banking Supervision and other standard-setting bodies. And these training materials will be coupled with access to peer-to-peer training resources. And the BIS actually plays a central role in this initiative because our online learning platform, which we call FSI Connect, will be used to disseminate learning materials and also conduct virtual trainings in this area. Now, on the use of AI in the financial sector, there's already increasing trends, especially in developed economies, but I think it's also observable even in emerging and developing economies, right? One of the speakers mentioned this, for example, in the context of payments. Use of AI and the regulations that will surely come soon will clearly have an impact on banks' businesses, right? We recently published a paper on emerging regulatory expectations in this area. And one of the main findings of our paper is that although there are common themes that are coming out, such as soundness, accountability, transparency, fairness, and ethics of the use of these models, authorities' views on how to actually implement these themes in the context of AI are still evolving, right? What is certain in our view is that regulatory and supervisory treatment of the use of AI models by financial institutions will be proportionate to the conduct and prudential risks that they pose. And for us, it is also clear that given the overlapping issues related to the use of AI, more coordination between conduct and prudential authorities is also important in order to oversee a smooth deployment of these technology in the financial services sector. So let me stop there and thank you very much again, Dilshan.
Thank you, Jeremy. So really, got your point in terms of the importance of capacity building as well as, driving the innovation and supporting the innovation front. So our third panelist is Yasushi Shina. He's from the Financial Standards Board, also based in Switzerland. My question to you, Yasushi, is based on what Jeremy said. I just want to get a perspective from you on, if you take the Financial Standard Board's global financial regulatory reforms, Basel III, this for the systemically important banks, the high quality accounting standards, provisioning practices. Are these aligned with the expectation of the bank's role in supporting the economy, particularly during these troubled times? Or do you feel that these standards can be, can take a slightly less rigorous focus during these times, because it might be too much of a burden on banks to be able to do both?
Yes, first of all, thank you, Dilshan, for your kind introduction, and also thanks to ABA for inviting me to this conference. I hope you can hear me. Yes.
Yes.
Okay, so thanks for the question. We certainly a sound banking system is a precondition or prerequisite for sustainable economic growth and the resilience of the entire financial system. And the Financial Stability Board's global financial regulatory reforms for the program has been focusing on enhancing or strengthening the resilience of financial institutions, including banks. And the entire financial system as a whole. Thus, we think that our kind of regulatory reforms will not only help strengthen banks' resilience, but also support the economy. So I think those two are aligned, and by kind of making sure the banking system is resilient, that would also help support the economy. In developing any policy recommendations in related to this, the FSB, like other standard setting bodies like Basel Committee, always conduct public consultations or quantitative impact assessments often, where we learn practical challenges from our external stakeholders. Through these engagements, we certainly adjust the proposed recommendations or standards to address the practical issues as needed. And I encourage the industry, including ABA members, to participate in and respond to such public consultations. Thank you.
Thank you, Yasushi. Maybe just one quick follow-up question. There are two banks, digital-only banks, that came into the top 1,000 for the first time this year. In that context, you feel that the policies and the standards need refinement for digital banks or the conventional?
Yes. So I think that's an interesting question. And but if digital-only banks have full banking license, like other traditional banks, I think they would generally be subject to the same regulation as these new banks will be able to provide the same services like other traditional banks next day. So certainly it depends on the jurisdiction's setups, but I think that's the general approach taken. However, I think the supervisory focus will be different from other traditional banks for these new types. Supervisors will likely focus their attention more on IT governance, for example, or cyber and operational resilience issues. So that's definitely going to happen, I think, in most jurisdictions. The FSB's interest is more on cross-sectoral implications of digitalization or technological innovations to financial stability, including on the regulatory approaches or regulatory perimeter. And implications to banks alone would be a matter for the Basel Committee, which is leading the standard setting for the sector. One interesting issue, I think digitalization or technological innovation poses, for example, is unbundling of traditional banking or financial services into constituent parts. For example, the full banking services are now separated into deposit taking, payment services, and lending, for example. And they are possibly provided separate by different entities. And the emergence of new actors, including financial technology firms or the so-called fintech firms that may not require a traditional banking license, is another kind of new developments we are seeing. So what such developments bring to financial stability and how to ensure effective oversight of these new active financial activities that may fall partially or fully outside of the existing regulatory perimeter is one topic authorities are currently discussing. And the FSB continues to closely monitor the developments of digitalization at financial institutions, as well as financial stability risks associated with new products and service and activities such as crypto assets. It is also working on the regulatory and supervisory issues associated with financial institutions, management of their dependence on third-party service providers and outsourcing. And we just published a discussion paper last November. So please look at it if interested. Thank you.
Thank you, Yasushi. Very, very informative answer. I think we have two points that have been raised in the question and answers. One is a comment and the second is a question. I think you can also scroll and see the two questions at the top of your box. The first question is from Shehan Fernando. Please explain the implications of liquidity risk towards financial performance of banking sector, especially during this global pandemic situation. So I think here the question is in terms of each of our countries have our own home currency, as well as you have the foreign currency, the predominant foreign currency, which to a large extent probably is the dollar, or if you are in East Asia, probably Chinese renminbi. But how do you actually handle the challenges associated with liquidity risk in a post-pandemic environment? Who would like to take that question? Please go ahead, Timothy.
Yes, thank you. It's a very interesting question. It's been sort of at the heart of my sleepless nights over the last years. Take the Maldives, we have our local currency, the rupiah, but a lot of transactions in dollars, and we import almost everything apart from papaya, coconuts, and a few other things. So liquidity on the rupiah side is relatively straightforward. The Maldives is a sovereign country, it can increase and print money as needed, and it has done so to a limited extent. Therefore, there's been no concern. Our problem has been the dollar. And obviously, we are now a CCC rated country, according to Fitch, along with Sri Lanka. And people are reluctant to invest. So it's been three things really we've had to do on the dollar front. One is very careful planning of where our dollars coming from, where they're going. Two, some quite harsh measures in terms, for example, of limiting what customers could transfer abroad through credit cards and debit cards, because this caused a lot of concern. A lot of Maldivians want to go abroad for travel, medicine, education, etc. So certainly I'm not the most popular person in the country by a long way, shall we say, to put it mildly. And then thirdly, we have worked closely with such people as OFID, ADB, EIB to ensure that we have had dollar support on a sort of on a commercial basis, but at least it has been there. So between the three items, it has been a bit tricky, to put it mildly, but we've always had sufficient dollars to enable to meet our commitments to ensure that the right imports are made and ensure there is a buffer. But I think there's a lot of learning when we come out of COVID about what smaller countries need to do for the next pandemic or next big global issue, because it is something that crept on us up on us very quickly, and we had to react in a way that was not always popular, shall we say.
Thank you, Tim. That was a good answer. The second question, it's not really a question, really. It's a discussion about how can regulators support the acceleration of cooperation between the fintechs and banks. So I think I was listening to the panel yesterday on the technology session 2. And one of the points that came out very strongly was that the fintechs need the banks as much as the banks need the fintechs. Fintechs have the strength of being extremely innovative. They don't think like bankers. They think completely with a different mindset, different paradigm. Whereas on the other hand, they need funding, they need support, and they need data, which is what banks have. So that cooperation is something I believe I think a lot of the regulators, all three regulators actually spoke about it. But would anyone like to come in with a little bit more detail in terms of some specifics, maybe one of the three regulators on that area? Dr. Tian?
Well, thank you. It's a very important question. In our experiences, we set up a one-stop communication platform. We always receive some complaints from the technological young people. They don't really understand what the financial regulations are. They encounter many problems and feel frustrated, see that regulators just hinders for their innovation. So we set up a one-stop communication platform so that any technical young people, they have some idea, they can come to this platform. We have a regulatory diagnosis for them to help them that what are the regulations are, what are their problems, how can we help them to solve those problems. And also we have a communication platform, because usually some fintech innovation ideas related not only to the financial regulator, but to the other ministries. However, it's always difficult for them to contact the other ministries, a lot of bureaucracy. So we as a financial regulator would like to provide a platform. If any issues related to other ministries, we would voluntarily contact the other ministries to find solution for them. So that's our message. Thank you.
Thank you. So I think those are the only two questions. I think we just have 5 minutes left. Maybe
one more thing I can add, Dilshan, for the same question. And in Sri Lanka side also, we have seen that most of the fintech companies, as you said, Dr. said, the problem is that they have some problem with coming to the market and data sharing, because the data is with us and also the bank. And so that's a problem they are having. And so that is what most of the countries, they introduce the sandbox, regulatory sandbox environment. So this is a one way of, I think, sharing the data and some extent, not all the full data. Then so that is give some, I think, space for the fintech companies to test their environment or to test their products. And the other thing is that in some countries, like Sri Lanka also, we are working on this Data Protection Act. If we are not having the regulatory, I think from the legal side, legislation side, if it is not fulfilling the requirement, then of course it is there is some barrier for the banks to share their data. So that is also there. Then so in our case, we know that the Data Protection Act, we work last 2-3 years, and it is under Parliament. And if it is there, then there is some, the confidence for the banks, financial institutions to link directly with the fintech companies. Thank you.
Jeremy, if I may, ask you a quick question. I think we discussed, I think a lot of the regulators as well as yourselves mentioned that some of the priorities are changing and there needs to be lots of action in terms of those areas. But do you think there is in your opinion, in terms of the pace of reform, is it going to speed up because of this pandemic, or do you feel that it's going to only change its focus because of this pandemic?
Yeah, thank you very much, Doshan. I think the focus of the pandemic now is not really on introducing new reforms, right? But I think most of them are, in fact, on regulatory relief measures, because as cited by the regulators among the speakers. I mean, it's for the banks to ensure that banks continue to support the economy, but at the same time, I think we should not lose sight also of the fact that the economy is only as strong as the individual players, right, including the banks. So that's why I think regulatory authorities are still closely monitoring the financial health of the regulated entities. So I think it's not really about adding more regulations at this point, because I think we've come out from the 2008 crisis with a lot of regulatory reforms already that have, in fact, strengthened the banks and helped them become resilient with the current pandemic. And if I may just add also to the question that was posed earlier about whether there's a choice between this ongoing part of the reforms that are still ongoing now and between banks supporting their and doing their role in the economy. I think complying with regulatory standards and supporting the economy are not really mutually exclusive. I think Yasushi alluded to that. I mean, regulatory standards or regulations in general are not there to make life difficult for financial institutions, right? I mean, they are there to make sure that financial institutions are resilient enough to support the economy, whatever the economic environment or condition is. So I'll stop there. Thanks.
Thanks, Jeremy. So I think we are almost at the end of it. I think I would like to maybe not to put all of you in a spot, but just ask each of you to be able to share with your audience what you think would be the key takeaway in the size of a small Twitter message. Maybe I think it's 280 characters. Just one message that you would like to share with the audience as a key takeaway? So I will start. For me, the key takeaway is the importance of collaborating between the regulators better and ensuring that we learn from each other so that we can implement some of these initiatives very effectively in our own countries. That's from me. Who would like to go next? Can I ask Ms. Fonesia to go next?
Yeah, thank you, Dilshan. Yeah, actually for us, given this evolving financial landscape, and to be able for regulators to meet, of course, the changing and increasing demand of our, as well, supervisory mandate. So there is this discussion about whether we go for an entity-based or an activity-based type of approach in regulation. But really the message for us as well, for regulators, you must continuously train, educate, and upgrade our skills to remain competent and prepared to address the changing and increasing demands of our supervisory mandate. So that's from us, the regulators. Thank you, Dilshan.
Thank you, Mrs. Panesia. A little more than the 280 characters, but a good message. Thank you. Dr. Tien?
Well, I think that continuous coordination, communication among financial regulators and financial firms are very important one. Thank you.
Thank you. Kumaratunga?
Yeah, in my experience and I think in the Sri Lankan experience, what we have seen, Dilshan, is that in Sri Lanka, we have enough products in our hand, and more than 60% of the population is also having the smartphones. But the usage of these apps and the mobile payment system is quite low. So that is because that education level has to be increased. Awareness session has to be done by the both parties, including financial institution and the central bank, and I think all the other players in the market, like telcos and other players. So that is a message that
financial literacy all around.
Yeah, literacy is important, because we have seen this problem with this pandemic situation. When we are locked down, we don't have the money at home and we don't have the cash in the purse. We have only the the phone and also the card. But if we cannot use this in the practically, then of course there is a problem. The financial literacy is the main thing. So that's the key.
Thank you.
Message can be.
Team, would you like to go next? The one takeaway.
Sorry, I had an unmute problem. 280 characters. We need post-pandemic to review global liquidity flows before the next crisis. And we do need to return our attention, the speakers have pointed to, the global climate challenge.
Good. Global coordination, much better global coordination. Thank you. Can we go on to Jeremy?
Yeah, so I'm actually quite disappointed that financial literacy was already mentioned. So I'll just narrow it down to digital financial literacy. I think, banks and regulators have a role in collaborating in making sure that innovation in financial services, happen, but at the same time to also help and collaborate in pursuing digital financial literacy among the population. So thank you.
Thank you. Yasushi?
Yes, so understanding the lessons from this pandemic is very important, and that would include certainly the innovations and also climate risk, as the previous speakers have highlighted, and the emergence of non-bank financial intermediation, which is also a kind of big issue at the Financial Stability Board, as you may know. And to do that, having a dialogue with all stakeholders involved, not only the banks or financial institutions and authorities, but also new players in the market is also crucial. And that's what the FSB has been doing. Thank you.
Thank you. I think we covered a number of aspects there. Digital literacy, global financial coordination, cooperation, learning from each other, collaboration. I think a lot of these aspects are important, and I think ABA has a big role to play, and in the months and the years to come, we'll get involved in building these bridges between us, between banks as well as regulators, to make these things a reality. Ultimately, what we are seeing right now is a global pandemic. It's a problem for everyone, and if everyone does not resolve it, all of us are going to have issues in the future. I think that's an important lesson. Once again, really enjoyed this session. Really appreciate the contribution of each of the speakers and the panelists. Really good interactions. Thank you very much. And for behind the scenes, all the work, Amado and Mig, in terms of organizing this session. Very valuable insights. I hope the audience also appreciated it. Thank you.